Welcome back everyone. Today's video is going to be a very important one, as this is the concept that I use to base my main strategy around. And it just will like change the way that you look at the markets, and you'll feel like a complete greater understanding of why the markets are moving they are, and you'll have a better ability to create your directional bias on the markets. You'll be more confident in knowing which direction the market's going to go next. So for example, and I think you can't know obviously, but I'm pretty sure USD is going to continue upwards to at least take out these highs. Probably fill this imbalance up here to this point here before, possibly coming back down. But the reason I know that, or the reason that I know that there's a high probability of that happening, is through the concept of order flow, which I'll be explaining in this video. And basically, I've taken 2 trades using it recently. One of them was sent to the Discord, one of them was sent a bit late, so I've sent a re-entry. Unfortunately, I wasn't able to get the first entry to everyone, but one of them was sent to the group. So obviously it's free. Feel free to join, and then you can analyze the markets with me. And if we kind of agree, then there's definitely a reason for you to enter the trade. So before we get into the charts, as always, I'll just start with the concept a bit. So order flow, that's what it says on the tin, I guess. It just shows you the direction the institution wants to push the market, and the way they do this is by placing orders to make the market flow, I guess. And that's why you'll often see, obviously the markets aren't going to be perfectly, making a zigzag pattern. Otherwise it'd be very easy to make money, and that just would be, that's just not going to happen. It's not possible. Obviously it does happen sometimes, but it's not sustainable, I guess. Okay, so I'll get into the theory then. So the reason that order flow can be used is because the institutions, when they place, so when you get your setup like this, push to the upside before a strong push down, then price mitigates the order block before continuing down again, then mitigates another order block, continues down, mitigates another order block, and then comes down. If you don't know what mitigates means, it's just when price returns to an area to kind of cancel out the original orders placed by the banks. I'll explain it a bit more. That wasn't very good explaining, but so what's happening here is that the banks are opening lots of buy orders to push price upwards. And then when they take their sell orders to push the market down, they've still got some buy orders open. And so they're going to be in drawdown with all these buy orders placed, around here and up here to push price up here to take out liquidity of the retail traders. All their buy orders is still going to be open, so they're going to be in big drawdown. And so they want to close these out for as little loss as possible, or even break even, maybe a small profit. And the way they do this is by pushing the market up again to their area, which is why we talk about premium discount areas, because it's going to be they're going to want to push it as high as possible in a bearish market and as low as possible in a bullish market, so that they can have the smallest loss as possible. And then price mitigates here, this order block, as institutions close their buy orders and then get into more sells. Obviously, when they're pushing price up here again, they're going to be entering more buy orders, which is going to have to be mitigated again, because they're going to be in drawdown during this push down. And that's kind of why the market, you can see it often respects supply zones in a bearish market and respects demand zones in a bullish market. And that's what you need to look for. And that's what I use to trade. Now, something that's you need to take note of is the probability of each of these trades. Actually, the more times that price mitigates an order block, the lower probability the setup is. As if you watch my video on liquidity, you'll know that along this here, there's going to be some buy side trendline liquidity. There's going to be a lot of retail traders placing their stop losses above here, creating a lot of liquidity above it for the institutions to take out. Because obviously not all institutions want to push price in the same way. And so, say the institution wants to buy, it might try and take out stop losses of the other institutions, because that's basically what's happening. They're not trying to take out your stop losses, they're kind of competing with each other. But what also could happen is that you could come into a higher time frame demand zone, and the institution could have just been pushing price down into their demand zone before. before their real move happens that they wanted to, which is the big push up. And obviously different time frames will have these setups, because if you're trading, say, the hour time frame, you might see something like this, and you might be trying to get into sales. But if you're trading the, say, daily or weekly, your overall bias might be bullish. The order flow might be bullish on the higher time frames, and so you're looking for buys in this area to go upwards. That all depends on how much free time you have and how much time you want to spend looking at the charts, and just what you're comfortable with, I guess. And so for that reason, the ideal trade you want to get into is this second tap, which is what I use. That's my preferred way to trade. The second tap always has the highest probability for me, I found, through back testing and just forward testing, looking at the live markets and gaining experience for that way. The second tap normally works out the best, targeting wherever, but normally just this low, just to be safe. I do also like the first area, but yeah, seconds the best for me. This is where you might hear people talk about risk or confirmation entries. The first entry is going to be risk because it's not confirmed yet whether the order flow is bearish in this case, but once it's already reacted once, you can be pretty confident that it's going to react again. And that's why picking the best order block is going to be quite important as well. But I can make another video on that if you would like. So just leave a comment down below. So yeah, that's the theory behind it. Hopefully you understand. If you don't, then hopefully when I get into the live charts, you'll understand a bit more. But if not, just leave a comment down below or a question in the Discord and I'll try and help you out. This is it, so I'll get rid of that for now. Oops. And then I'll go on to GBP New Zealand for the first trade that I'm in. Let me just get rid of this. So if we go to the 4 hour, I like the 4 hour and the 1 hour. What you can see up here, first of all, something to look out for is whether supply or demand is getting respected. As you can see here, supply here has been respected before another push down. And maybe there's some supply here. Obviously, how you define supply and demand is going to affect it or not, but yeah, you can see supply is being respected. And then what you can see here, if you watched my video yesterday on change of character, you know that this would be a valid change of character. As you've got higher high, higher low, higher high, and then a lower low for lower high. So you could have got in your risk entry of this candle looking to target down here. That would be very nice, but as I said, I prefer to get in on the second tap, and so I look for another order block here. Nice indecision candle for an engulfing strong push down, broke structure, and it also creates some liquidity. If you have watched my order block video, you know liquidity is a must. So we have some liquidity there to be taken out. A lot of retail traders trying to get short, stop us above there. So a lot of liquidity up here for the big institutions to open their positions to push it even more further down. So then you can get in here, stop loss above there. To be safe, you can target there for 1 to 4.5. But honestly, the market will probably push down here, so you could also target down there. And if you want to be getting, say, a re-entry, you could, on the 4 hour, you could wait for price to break this low, and then this is quite a nice supply zone up here. But I've also posted a re-entry on my Discord if you'd like to get in on that you can already set limits for if you wanted to, as long as you agree with the analysis. But yeah, as you can see, this follows the kind of strategy and the theory that I was talking about earlier, with order blocks getting respected, supply getting respected, so you know you're in a downtrend. The institutions are mitigating their orders up here, and you can kind of not know but have a good sense that they'll probably mitigate it again before pushing it down again, as that is the order flow is bearish, so they're in sales, they want to push the market down, and you want to be going along with the trend of the institutions. You want to be trading, against the trend. So that's the first trade. Very nice 1 to 9 if it does fully play out, but I will be happy with my 1 to 4.5 for this entry. And the second trade that I'm currently in is EURUSD long. Now this is a bit of a weird one because there's a candle here that, if you're looking here, I'm just doing this, the demand zone did actually get slightly taken out before pushing up, but the true demand zone is actually this candle. As for demand and supply and demand, you're looking for demand zone, you're looking for the last selling to buying, top to bottom, I guess is the easier way of describing it. And that's how you can know if an order block has already been mitigated. For example, up here, this is looking into the future. If price was to come up and miss it for breaking structure, it could just be creating liquidity, but it could also have just mitigated this whole supply zone, because on the high time frame, this is going to be all one candle for a strong push down. You might not be able to see it, but we can have a look. So on the daily, you can see maybe it's 2 daily. No, okay. It could just mitigate this order block here. You're looking from the bottom to the top for supply zones. Hopefully that makes sense. But yeah, that is one reason why I prefer entering on the second entry and the second tap, because you can really confirm whether supply is being or demand is being respected or not. Because if you just try to enter on this candle, obviously you get taken out. But for your USD, I actually entered on the 1 hour. So I saw a nice push up, a lot of pushes up, and this was the other area that I was looking at. This is where I entered from. The one thing to note here, the order block doesn't have to be above the previous one, because you don't know whether orders were being mitigated. Most of the orders could have been placed, or their sell orders, push it down here, and so that's where they wanted to push price again, so they didn't get out in the loss. They got out in small profit maybe here. If that makes sense, hopefully it does. So yeah, for this trade again, you've got breaker structures to the upside, trends bullish, respecting the demand, and then liquidity is being created here, some sell side liquidity, and so I've entered with limits here, stop loss just below the order block, and take profit at the recent high. But as I said in the last video, I could see it going up to the last structure here, but it could fill all this imbalance up here as well. But for me, I'm happy with this 1 to 7 trade. If it does fully play out, obviously it could still come back and hit my stop loss, or we could get a re-entry possibly here. Just look for liquidity, look for your rules, whatever, and then you can try and enter. Target this high again, or the high that's formed before the pullback. As you can see here, order flow bullish. That's the main thing to take away from the video. Prices tapped into here, pushed up. Sorry, not tapped into here. This is the demand zone that was created. Prices pushed up, tapped into it, pushed up again. Look for a new area that the institutions might look to push price back into before continuing their original direction. And for me, it was this area. Fit all my rules. If you want to know what my rules are, then obviously you can watch my order block video. But yeah, I was happy to enter here to try and take the market up, and it's running quite nicely at the moment, which is nice. Wake up to a bit of profits. Yeah, hopefully this video has been helpful. If you do have any more questions, then please just do leave a comment or join the Discord or send me a message on Instagram, whatever is easiest for you. But please make sure to subscribe and like the video if you have enjoyed. Thanks.